Welcome to Trading Nation, folks. I'm Eric Chemi. Today we're joined by Jeff Saut. He's Chief Investment Strategist at Raymond James. Jeff, thanks for joining us here. I want to get right into it. This tariff situation coming out of D.C., is that going to spark a tariff war? Is that going to derail this bull market that we've seen over the last 20 or so months, or especially since the election? Is this going to derail the post-election bull market? What are your thoughts on all this, Jeff?
Yeah, I don't think it derails the structural secular bull market that's been in effect actually since October of '08, not March of '09. The majority of stocks bottomed in October of '08. You've still got the pillars here. You've got improvement in the economy. GDP is picking up. Earnings have been coming in much better than people expected. We think that's going to continue into 2020. People are still underinvested in this thing, so I don't think it derails it. I did not, however, expect the tariffs to go into place. I told print media this morning that I don't know how you analyze this until you see what the retaliatory moves are. So I'm just kind of sitting on my hands right here until the dust clears next week.
So you're saying you're sitting on your hands, but you look at that chart, you're at these, let's call it the lows of that trend line moving up. So some traders might say, hey, I see some lows. I could pick up some gains if I buy here, pick up some short-term pop. But are you saying you would actually sit that out even though you think this bull market has got a lot of room to run?
Yeah, the rarest commodity on Wall Street, Eric, is patience. And typically, markets, when they get into one of these downside schemes, don't bottom on a Friday. In fact, my mantra of 47 years in this business is never on a Friday. The markets give investors over the weekend to brood about it, tell their wives they can't have the new Mercedes-Benz. They come in sell mode, upset in Monday, Tuesday, which typically leads to turning Tuesday. That's what happened at the selling climax lows on February 6th. You got the subsequent throwback rally that we said would fail. You came back down and made an undercut low of the February 6th selling climax lows, and we actually told investors to buy that undercut low.
What about this tariff in the context of a black swan event? I mean, black swans, I think, were about things you can't see coming. The tariffs were something that you could see coming because it had been talked about. It was a known unknown. We just didn't know what they were going to do. Now we know what they're going to do. How do you deal with that impact into the markets that I think a lot of people simply weren't expecting? Certainly a lot of traders were not expecting.
Yeah, and I was one of them not expecting. And your point about a black swan event, I mean, if this thing boils over into a full-blown trade war, and I would add that I don't think this is about China. I think this is more about NAFTA and sending a warning shot to Mexico and Canada, our two biggest trading partners. And if this spills over into a full-blown trading war, then I have no idea where the bottom is going to be in this. But I do think it's a noise in the short run. I think it's going to present a buying opportunity in the long run. But we'll have to see what happens in the next couple of weeks because I think it's going to take that long to sort it out.
Do you think a couple of weeks, though, is not enough time to figure it out? Because it feels like these trade wars, they take months, quarters, maybe years to play out, depending on how one country reacts and then the next country reacts. Do you feel like you can actually get some clarity in just a couple of weeks?
Well, I think when George W. Bush put in tariffs, it took 2 years for the World Trade Organization to actually reverse those tariffs. So your point there is absolutely on spot. But I think at least the people I talked to abroad today and in Canada and Mexico, I mean, Canada and Mexico are already trying to figure out how to source things somewhere else than what they normally get from the U.S. So I think if you're going to see a retaliatory move, you're going to see it in the next couple weeks, and I think that'll provide clarity.
What about the fact that so much of the revenues in the S&P 500 are foreign revenues? So how do you think this plays out just from a bottoms-up analysis of how these 500 companies get their money, who they sell to, where it comes from? Do you think this could individually just bring a lot of company earnings down?
Well, that's a fair point. I also think you're going to get kind of a push on input costs, and that could impact profit margins, which would make the earnings estimates for this year and the out years probably not as high as they are right now. It's a fair point. But I would also add that the small cap and mid cap complex, which is Raymond James' sweet spot, in fact, our big small and mid cap conference is commencing on Sunday over in Orlando. It could be a sweet spot for them as opposed to the ones that derive a lot of their revenues from abroad.
What are your clients, your colleagues, other traders, people that you're talking to over the last 24 hours, what are they saying in terms of their reactions to what's been going on out of D.C. and how it's affecting the markets?
Well, the ones that took our advice, I have been on this show a number of times in January saying that our models, our intermediate and short-term models, were targeting February as the first real point of potential downside vulnerability for the equity markets. And we advised trimming some positions and raising some cash. If investors did that, they're feeling okay about this. If they didn't do that, then people are starting to panic. In fact, I talked to a trade desk here at a major mutual fund earlier today, and they said that the selling was actually intensifying, and it was getting to the point where it didn't make a lot of sense.
Didn't make a lot of sense. That's an interesting one. So we're going to have to see what happens in this, call it 2,600 to 2,900 range. We're about 2,679 there as soon as the chart was up. So still in that low end of that range. We got to see how this plays out. Jeff, it's been a pleasure having you and chatting about everything going on in D.C. and in the markets here.
My pleasure.
That was Jeff Saut, Chief Investment Strategist at Raymond James. I'm Eric Chemi. We'll see you next time on Trading Nation.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.